Lately, you've been sort of comfortable that we are in a consolidation phase, and you also switched to some different parts of the market, and you're still there, but now we have an election coming. So I want to hear what you have to say about that and whether we are still in this new bull, even if we get a sweep by the Democrats. Would you still think we're going to have a bull?
Yeah, well, thanks, Joe. Thanks for having me. I mean, look, I think the election is, taking all the oxygen out of the room. I mean, and of course, we have the pandemic still, which is still on people's mind. We have a second wave to go through. We know it's coming. I think how we deal with the second wave is going to be more important for the market than the second wave itself, similar to the lockdowns we saw earlier. And because it is the political hot season, I mean, risk of lockdown and sort of activities along those lines are more elevated. So, yeah, it's all coming to a head. I mean, we have 5 weeks to go. Tonight's a big night, obviously, from an election standpoint, and it's going to remain volatile. So that's why we've been more comfortable kind of with this consolidation call. We think the 200-day moving average is a really good, support line. It's not that far from here in the downside, 3,100. In S&P terms. And then the upside, we really hit some very powerful resistance around 3,600, 3,550 to be exact. And we got rejected. So I think that range makes a lot of sense, but that's a big range, Joe. I mean, that's a highly volatile environment. And so we've been advising clients, take your exposures down a little bit here into this period. And we think the most important message we want to leave with clients right now is this is a bull market, as we've been saying since March. It's a new economic cycle, more importantly. And so into this consolidation, we want to be adding risk, and we want to be adding risk in areas that may not be so obvious to most folks, which is instead of buying some of these leaders for the last 10 years, you want to now rotate towards parts of the economy, parts of the market that have not yet benefited from what we think is going to be, a recovery that goes into next year. And those are things that people generally probably don't own much of.
All of the concerns that you mentioned that cause you to think the consolidation will continue, you expect them to be to end favorably, I think you say in the note. Okay, so we get that. And then you did say that after the recession caused by the pandemic, that it sets up a new bull market, both in stocks and the economy. If returning to my question, if Biden were to win and the Senate were to go Democrat, do you just ignore that for your long-term bull call on the economy and the market, or would that present issues for you?
No, let's talk right about it. I mean, the thing is, I don't think the outcome of the election matters as much as policy. So politics is different than policy. And, here's the thing. We're in a recession still. We're in a pandemic. And so our view is that next year, we think it's going to be very difficult for either side to avoid those facts. And what that means is we're going to get more spending from Congress, whether it's before the election, which now is, that chance of that is gone down, or after the election. And the market's smart enough to kind of look through that and say, okay, well, it's a waiting game at this point. We're going to get it either now or later, because ultimately the politicians will have to cave to the fact that we're in the recession and the pandemic, and we still need some of that fiscal support. So I think that's the main message as to why we don't think it matters in the short term. Now, longer term, obviously, who's in the White House, who's in Congress matters a ton for policy. But we think that effect will be more felt at the sector level, right, at the stock level, than it will be at the market level. Because as I mentioned, we think the market could be supported by more fiscal spending. So let's talk about some of those industries. So clearly, Democratic sweep, folks are worried about more regulation in the financial area and maybe perhaps energy. Obviously with the environmental focus. So those are sectors that probably won't do particularly well. If you look at technology, however, that's an area that has been ripe for regulation in many people's view. But there's a view that the Democrats won't be as tough on the tech sector, and they won't be as tough on China, perhaps. So maybe that helps that area. So it's clearly important. We think this is going to be a very close election in both the congressional elections as well as the White House, and that's going to keep the volatility high till we get through. So we think it's a bull market either way. However, you're going to want to skew your portfolios depending on who wins.
Shepard Smith here. Thanks for watching CNBC on YouTube.